Welcome traders to our post-week market review. So jumping straight into things here from where the market originally opened up. As you can see, this overall week has been a lot quieter in terms of volume and overall moves. This is where the market opened up. This was the first candlestick. As you can see, price ended up reacting or rejecting off of this level, sort of previous London close, or previous session close should I say, on Friday. We tested this area as a resistance before we then saw price push up in a bullish fashion. We saw price push above this level of 5,000, and as we said in our last video, anything above 5,000 we will accept as a sort of overall bullish market on the higher time frames. Anything below we will accept as bearish, and as you can see, price did come back down to this 5,000 level multiple times and test it as a support, sort of solidifying us that we were sort of in a overall bullish move. But you can see price was just sort of moving sideways. It was just sort of overall consolidation from Monday all the way up until Thursday. We rejected off of this area as a resistance, a very common resistance area that we recently established from a previous all-time high. You can see that price has projected off of this level quite a few times. From there, then price ended up rejecting on Thursday at 4 p.m. We saw a big bearish move on gold, drive price all the way down. I believe this was due to some sort of economic or political news. We saw price push itself all the way down to around 4,880. You can see that price ended up rejecting off of this level, visible by these exhausted wicks that you can see on these candlesticks. From there then, throughout the early hours of Friday morning, so through Asian session, we saw bullish momentum carry price back above this overall point of interest of around 4,963, with the New York session carrying price even further to where it ended up closing at 5,040. So what could we expect for gold in the coming week? So as you can see, we had an overall big bearish move after we saw this steady push up with higher highs and higher lows. Price ended up dropping, and we have now corrected. The markets have now corrected themselves, with the price sort of consolidating in this overall area. The only thing that does tell us is it tells us that sellers are trying to push price down. However, the buyers are still steadily in the markets and are still fighting to keep price above that 5,000 level. You can see that on Friday, with the help of some sort of economic or political news event, the sellers did push price past that 5,000 level. However, the buyers have stepped back in, gained control, and pushed price back above it. So the overall conclusion for this week is sort of just overall consolidation, sideways movement, and I am going to anticipate that we do see a continued bullish momentum. I do think at some point price is going to come back to this 5,100 level and end up breaking it. I think the next time that we see price come to this level, we do see that break of structure and price continue to around that 5,250 mark. I do think if we go ahead and have a look at our 4 hour, you can see it a little bit more clearer. You can see that this overall common sort of resistance point at around this level here has held price down for quite some while now, quite some time now, after this big bearish move. And if we do see that break of structure on the higher time frames, we most likely will see price push back above this all-time high and sort of recorrect itself. We can drag a Fibonacci level, and we can see sort of what levels we are rejecting off. So as you can see, we've seen sort of a 61.8 retracement so far, which is sort of the golden ratio for a Fibonacci level. If we do see that 61.8% level continue to be respected, then we could see a continuation of overall bearish momentum with price pushing even further than we saw price push to here. However, it does definitely depend on the first coming days of the market. If we can see price break this level here of around 5,000, let's call it 5,100. If we see 5,100 broken, we see price actively trading above this level, then we will anticipate that price will go ahead and be on its way to making a new all-time high. So it's more probable for bullish momentum to continue upon market open tonight at 10 p.m. GMT. However, there is definitely possibilities for continued bearish momentum as we are rejecting close to that 61.8% retracement mark on our Fibonacci level. So with that being said, that's pretty much it for our post-week market review. If you are wondering why there was no video for our midweek technical analysis, you can see there's not actually much to go off. It would have been a sort of pointless video. It was better for me to write it up in text. The price has literally just been moving sideways until obviously the 4 p.m. event that happened. where we saw price push below it. Other than that, nothing's really happened. Price has stayed within this sort of range, which is actually really quite weak for gold in comparison to the last few. So yeah, with that being said, that's pretty much it for our post-week market review. As always, I hope you have all enjoyed. Don't forget to like, comment and subscribe, and I will catch you in our midweek technical analysis video. Peace.